So simple choice for you. Red pill or blue pill? Does anybody not understand the reference? Okay, so if you want the blue pill, the Matrix happy pill where you get to live in the fantasy, go across the hall to the meeting rooms to hear from the companies. If you want the red pill, I'll do my best to give you the truth, but I'm going to depress the shit out of you. So if that's not what you want, this is your last chance to run for the exits. This is the red pill room. No takers? All right. Well, okay, you asked for it. Well, actually, you didn't, but I'm going to give it to you anyway. Frankly, I don't remember what I told them the topic of my speech would be. They always ask you months in advance what you're going to talk about. And if you had asked me last week, I wouldn't have known what I would talk about. I wouldn't have known that we would have this great deal with China that made everything safe and everything is fine now. So everything would change. Let me do a little bit more Q&A. How many of you think the trade war's over, the worst is behind us, it's just the details to settle out? Anybody want to raise their hand there? Not one. Okay, one. You think the worst is behind us? I would love to know what you're taking. It's not the red pill for your optimism. All right. How many of you, if you're not a full-fledged technical analyst, this is relevant. How many of you look at the charts and try to gauge how things are going, where we're going, looking at the charts? Will you admit to being a chartist? It's no shame, I'm just asking. About a third, okay. All right, how many of you think we are in uncharted waters? You realize there's some tension between looking at the charts and thinking we're in uncharted waters, yes? I'm not trying to throw our dear chartist friends under the bus here. Well, maybe a little bit. But these threads come together. This is the red pill, okay? The most important thing I can tell you today, the most important takeaway from all of what you're going to hear here and going forwards, and I think the thing that will help you, if not make the most money this year, maybe lose the least money this year, is that Trump shock ain't over. I mean, it's very clear when he does this big tariff war, and Vietnam says, oh, we'll take our tariffs to zero. And he says, well, I'll think about that. It's clearly not all about the tariffs. Trump has an agenda, and whether you think he's the angel or the demon, the savior or the madman, he has an agenda, and it's much more than tariffs. He is trying to reindustrialize the United States. Now, whether or not you think that's a good idea or not, let's put that aside. This is not something that's done in a day. Tariffs are just one tool. It is, at the very best, let's say you agree with Trump and there's military weakness in having everybody else make your heavy equipment and even your weapons and munitions, and you have to have an industrial base for national security reasons. And let's say deregulation and tax reduction, all this other stuff is going to make the economy boom. And you're broadly on board with the Trump agenda. At the very least, making this transition, making these changes is hugely disruptive. This is the biggest disruption in the US economy and the global economy since, I would argue, since Richard Nixon closed the gold window in 1971. Nobody has ever tried to make a change this big. And through wars and oil shock, there's other things have happened. Even the end of the Cold War, the peace dividend didn't really, it changed the world. It created the globalization rush. It created a lot of wealth for a lot of people. But it didn't fundamentally change the way the world worked. It changed what was possible in that existing context. Love him or hate him, Donald Trump is trying to fundamentally change the world order, or at least the United States economy, and as the biggest economy in the epicenter of finance, this affects everything and all we do, all our investment decisions. Love him or hate him, Donald Trump is going to be that spider at the center of the web of all that's going on. So if you forget nothing else, or remember nothing else that I say, forget everything else, this is the key. Whatever investment decisions you make, you need to, I think, for maximum beneficial outcomes, you need to remember that Trump shock ain't over. If anything, it's just getting started. So you know, I don't think the worst is behind us. I mean, let's say the whole focus is really China and everything else is secondary. Trump makes easy deals, lets Europe off easy. Yay, Germany can get back to making BMWs and everything. And everything else was just kidding. It's all about China. That is still huge. And you know, it's very interesting to me to have Donald Trump announce massive deal. China and US have reached agreements. And China says, we had constructive conversations. This is not reassuring if you're looking for the kind of calm, if not rules-based order, then at least stable financial and economic regime in which markets can function efficiently. That's not where we're at. Have I depressed you yet? Okay. This is my view. Now, okay, if you're a contrarian, this isn't necessarily all that depressing. There's opportunity, crisis and opportunity, right? Okay. But, I mean, never forget the broader picture. And so a way of summarizing this is I see years of pain ahead, even assuming the best possible outcome. The best possible outcome of the lowest disruption transition to this wonderful new world order that Trump is trying to create. And of course, you know, who knows if it's the best, it could go wrong in so many ways. We could spend the whole afternoon talking about the many ways this could go horribly, horribly wrong. Not the least of which I think is actual full-on kinetic war. The kinds of things that Trump is doing are the kinds of things that have unleashed world wars in the past. As the Austrian economists say, if goods don't cross borders, soldiers will. This is very, very dangerous stuff. And it would be hilarious if it wasn't so pathetically funny to hear Trump accusing Zelensky of playing with World War III when that's exactly what he's doing. So, hey, I got a fan in the audience. All right, we're good. So this is really important. Your decisions need to be framed in the context of massive volatility, massive disruption, pain ahead. I mean, I'm here in Europe, so I probably won't get any rotten tomatoes thrown at me. But how many people here think the average American is going to be able to tighten his belt and endure the pain to face down those rich Chinese people over the trade negotiation table? I just don't see Joe Sixpack winning that fight. So massive disruption ahead. And then, as investors, and I hope we don't all have all our eggs in one basket, but broadly speaking as investors, there's another thing to remember here, is you look at things like there's this slight adjustment to retail sales or producer prices or the weekly unemployment claims. And the market just goes zoom this way or crash that way. And it's like Mr. Market is totally psychotic. He's manic depressive. He's going up and down. Remember that Mr. Market isn't a person. It's millions of people. And the ones with the biggest money, they all run algos. They all have trading models. And you plug a variable into a trading model, and even if it's a little variable, like it tips a model from buy to sell, and that has cascading effects. So the world that we're in today, where the individual investor is a small part of the volatility in the context that we're in, is one in which you see, it's kind of like mass delusions. These models, they're never right. They're at best approximations. And they have these inputs that when an input trips it from one side to the other of the ledger, you get big moves. And most of these big brokerages and Wall Street banks, they all have very similar models. They all came from the same universities and they all study the same thing. And so you see selling beget selling, you see stop losses triggered, you see these massive moves one way or the other. And it's not really that the individuals have gone psycho, that's the world we operate in now. And so you, as an individual retail, hopefully sane investor, need to understand that your counterparty is not you. And in this world where Trump shock is still getting going, that is a world in which this apparent madness, irrationality, excessive volatility is not going away. So we talked about, and maybe this is the bit of the blue pill, like, okay, so what? There's my theory, that's my depressing thoughts about the world. What do we do in this environment? Obviously, in my view, there's an enormous and powerful bid here for safe haven assets like gold. And you don't need me at the Deutsche Goldmesse to give you a new argument or maybe a rehashed old argument for why gold is good. But everything I see about the world today underscores this in my mind. So I'm not here to tell you that gold has bottomed and we're going straight to $4,000 or anything like that. I'm telling you that based on these things that we've been discussing, in which at least half of you have been nodding as I've been saying these things, this is highly supportive for gold. In this environment, there is a bid for safe haven. Our esteemed presenter just before me said something about this tiny 1% allocation to gold globally. JP Morgan just updated that figure, and they're still at the 0.5% that Rick Rule talks about all the time in his talks. Whatever the number is, it's still a tiny allocation to gold. Most people have still just barely even begun to hear about gold because it's been making headlines. The average person doesn't own it. So this is A, still a contrarian case. B, it is a safe haven that has yet to permeate the broader marketplace, and I think that's very bullish. On top of that, you have, this isn't news, but you have the weaponization of the dollar after the second invasion of Ukraine in 22. That is a one-way door. When you tell the world that we may, at our discretion, completely disrupt your financial flow through New York, through our monetary system, you give an incentive to the entire world, allies and foes alike, to maybe hedge your bets a little bit, some diversification in case some, who knows, maybe some madman gets elected into the White House and does crazy things. That would never happen, right? So I think that drive, de-dollarization has been a multi-decade trend anyway. I'm not saying that the gold-backed BRICS is coming tomorrow. I'm just saying that was a trend anyway. And since 22, the weaponization of the dollar has just cemented that. And now we have Trump 2.0, threatening to take Greenland by force, maybe Canada too. These are not the kinds of things that make people feel, oh, the world has become a saner and more rational and calm place. I don't need no stinking safe haven assets. Everything's fine. So there's multiple factors here. And the reason why I'm hammering on this is not so much to tell you, oh yeah, gold's going to the moon. But after gold kind of has gone to the moon, it is a reasonable, it's a sane question to ask, how much upside is there left? Are we due for more correction here? If you look at gold on a so-called real basis, if you adjust gold for CPI, bouncing off 3,500 is a red flag. That's the 1980 peak adjusted by CPI. So you could say that gold hit a ceiling twice now and it's bounced back. I'm not a technical analyst, and I just talked about the dangers of following the charts in uncharted waters. But you can't help but notice something like that. And so what I'm saying is, I think, frankly, you would be stupid in the technical sense of Doug Casey, of stupidity meaning an unwitting tendency towards self-destruction. In this sense, I think it would be stupid not to see gold bounce off 3,500, retreat, and say, I should think about this. What is my downside risk? And that's my reason for the cheer pep talk here on the gold thing. In a world where central banks are buying gold, in a world where the President of the United States is tearing up treaties, upsetting the status quo, rearranging the entire global economic order, in a world where people are waking up to risks left and right, including military conflict that just keeps not going away, this is not a world in which I'm worried about the downside in gold. So, okay, maybe it's bounced off this $3,500 line. I think it's rational to ask, especially at a place like the Deutsche Goldmesse, well, what is my downside risk? So my message here, the red pill message, this isn't just cheer, cheer, joy, joy. Looking at all the scary things in the world today is I actually see limited downside in gold. I would see, never say never, but a sort of worst case scenario would be that this is like 2020, we rush up to 2000, and then we have years of consolidation before the next breakout. If we don't have another breakout soon, then I would see a period of consolidation like that would seem likely to me. Could gold go down massively? Anything's possible. But think about this. If gold drops $1,000 an ounce from 3,200, 3,300, the better gold mining companies actually still make money. The actual business of mining gold, the existing producing assets, they were all modeled on 1,500, 1,800. I mean, just a couple of years ago, a $2,000 price assumption would have been very aggressive. So today's gold mining business was brought into, the assets were brought online in a world of much lower gold prices. So gold could just crash $1,000 an ounce. And the companies that are worth owning would still make money. So I think what I'm saying is not that the downside is impossible, not that a retreat can't happen, but that even if it does, it creates an opportunity. I think it's unlikely. I have 5 reasons why gold is more likely to go sideways to up, and I have really only the technicals for why gold might go down. So I'm just not worried about it. And so the takeaway is, yes, I'm looking to buy gold stocks. And the interesting thing, though, is that, oh, gold has corrected. We're all worried it's pulled back. But the gold stocks really haven't corrected that much. Oh, we're still well over $3,000. And over $3,000, even the newbie can say, well, gee, that's a pretty high gold price. Right? So I think this is a very interesting time and environment. So if you wanted some happy joy news from me, I just, 80% of all the data out there is very, very bullish for gold. And as a contrarian, I'm kind of hoping we do get a scare. I'm hoping we do get a break below 3,000, which I do think would scare a lot of people. And I think even your Agnicos and Francos and the tier 1 companies like that, even they would go on sale at that point. And for anybody that doesn't own them already, I think that would be a fantastic opportunity. And of course, if the majors get a sniffle, the juniors get a pneumonia. So for the courageous contrarian, maybe there's an opportunity there. But I'm not sure it happens. So my marching orders right now are to look for gold opportunities regardless. If I could find a compelling value proposition in the gold space right now, like if I went in the hallway today and I found one that ticked all my boxes, I would be willing to buy right now. I am not betting on lower gold prices. I'm not betting on gold going to the moon tomorrow, but I see my sort of worst case scenario is sideways for some years, but with Trump shock ongoing, I actually think that gold finishes this year much higher. I don't do price targets, but considerably higher. All right, what else? So there's the other yellow metal. And this is the Deutsche Goldmesse, not the Deutsche Uranium Messe. But I got to say, the other yellow metal is very interesting. And a couple things to keep in mind. Of the last 4 recessions in the United States, uranium was slightly up to significantly up in 3 of the 4. I don't want to do my fingers wrong because I could end up pointing the wrong one at you. 3 of the 4, gold was slightly up. Uranium was slightly up to up bigly. And the 4th one was the GFC in 2008, and uranium had peaked in 2007 and was screeching down already. So arguably, uranium being down on that one had nothing to do with that recession. It was already in correction mode well before that. So uranium has a track record of being recession resistant, turbulence resistant. This makes sense. Uranium is for baseload power. It's the kind of thing you use for keeping your hospitals running and your airport lights on. It's not the sort of thing you tighten your belt on. And obviously, the world has gone through a sea change on this. I just saw the headlines today. Belgium has voted to repeal their uranium ban. You've got Denmark reconsidering nuclear energy. Even the People's Republic of Massachusetts is talking about nuclear. And then, of course, Germany has expressed some regret over shutting down its last nuclear power plant. I saw some guy from the Green Party doing an interview where he said, yeah, that was probably a mistake. But it's too late now. It would take too long to restart them. But it was striking to me that even one of Die Grünen, was saying, yeah, Greta Thunberg must have got hold of him and saying, what? You're burning more coal? How could you? How dare you? All right, so I'm really big on uranium. And unlike gold, which is still sort of, we just heard somebody, all-time highs. Okay, not quite anymore, but the mindset anywhere over 3,000 is just all-time high, all-time high. uranium corrected 40% from its high in January 2024. And the stocks, many of them, really took a beating. And it had been gone down, 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 down for over a year. And then it started looking like it was carving out a bottom, but it had done that before. But now I think, and I'm not a technical analyst, but you look at that chart, and it has clearly carved out a bottom. This is a longer lasting and bigger upturn than any of the wiggles on the way down. I think that whoever was selling at whatever price they could get, I think that has dried up. I think uranium is likely to go north from here, and there are compelling value propositions on the table in this space right now. Unlike the gold stocks, a lot of the uranium stocks got whacked hard, from blue chips to brand new juniors. So I actually see an enormous amount of investment opportunity in the uranium space right now. And I'll tell you my personal shopping list, it's all uranium stocks. And it's not that I'm anti-gold or anything else, but I'm trying to buy low, sell high. And there's not a lot of great gold stocks that I could think of as a buy low opportunity, right? So I want to buy low, sell high. And you know, maybe you don't care about uranium, you're here just for gold or silver, but I got to tell you, red pill here. You know, if you want to buy low, sell high, if you want to make money, I really think you need to look at the uranium space. I'm also, and this may sound contradictory to everything I've just said, but stick with me for just a moment. I'm also very bullish on copper. And my thesis here is that I'm actually bullish on the commodity sector writ large because I think the Trump agenda is inflationary. I think everything Europe is doing and will do, both in response to the economic slowdown and in response to Trump and the remilitarization, all of this will consume enormous amounts of raw materials. And if even in Germany you're going to lift the debt brake, you know, clearly the spending is going to be there. This is highly inflationary globally, which is bullish for commodity prices as a class. I do think we need to go through the ringer first. Like I said, I don't think the worst is behind us. I actually would expect pretty much all industrial minerals to get even cheaper before they really take off. There's more bad news in the immediate future. But once we're through that, everybody's agendas, from Trump to Lagarde and everybody, you know, the agendas around there, even China, you know, they're trying to stimulate, they keep having these new stimulus packages. Everybody's stimulating. Everybody is opening up the policy floodgates. So I think this is very bullish, but you know, the rising tide doesn't necessarily lift all ships, or not all of them at the same time, and not all of them equally. We talk about commodity supercycle, but the reality is that the metals and other minerals often diverge greatly. So I'm not going to buy all industrial minerals. The reason why I single out copper is because it's in structural supply constraints. There's just not enough of it. Maybe this year comes close to balancing, but this isn't just Lobo, that crazy guy. It's like all of the institutes, the engineering firms, the big and reputable businesses in this space. Everybody's projecting large and increasing copper deficits going forward. So combined with higher prices, inflation, you know, and the supply constraints, I think copper is just a no-brainer. At some point, it's just going to go and not look back for years. And I suspect that point will be later this year. Not right away, but I think there's a lot of money to be made on copper. And again, if you're looking to buy low, sell high, with copper holding above $4, you know, it's not quite bargain basement, but I do think there are opportunities there that everybody needs to look at. This brings me to silver. Silver has been, you know, sort of bipolar, and my diagnosis, Dr. Lobo here, I'm not a psychologist, but it seems to me that what we're seeing is that when gold really moves, one way or the other, silver remembers that it's the poor man's gold, and it goes with it. And silver does track gold on the big moves. When gold is waffling sideways or indecisive, then silver tracks copper. On those moments where gold isn't really doing anything, it's not driving, well, there's the industrial demand, the solar panels, the electronics, the medical uses, all these other industrial uses. And it's really striking how you can see, even up on a yearly basis, it looks like silver is moving with gold, the big moves. On a weekly or a daily basis, you can see numerous times on the chart where silver will track copper, just like a record groove, right? Just tracking copper. and then that changes. So where I'm going with this is I'm bullish on copper and gold. So how can I not be bullish on silver? But I'm concerned about near-term potential downtime side in silver. If gold is going sideways and the industrial minerals tank, I think silver goes down in that context. Now, I'm not predicting that. It could just be that there's some scarier headline and gold goes back through 3,500 and on to the races, and I do think silver would follow it. I'm sorry, I don't know which that would be. If I knew that that would be, I would tell you, and we'd all make a fortune. But anybody that does tell you that they know what it will be, I recommend you run in the other direction, because nobody knows that for sure. I'm just red pill here. The truth is, I don't know. I don't think anybody knows. And what I'm trying to warn you is, you can't be religious about silver, which I don't know about here in Germany, but in the United States, many people are very religious about silver. And if you don't say that silver is better than gold, it's more rare than gold, it's, you are just persona non grata, never invited back again. That's the reality there. I'm bullish on silver, near-term nervous. And the interesting thing there, though, is just so many of the best silver deposits in the world are in the worst countries. So there's a huge political risk angle there. And if some countries change, like, say, Mexico, right? If things get better, I think there could actually be opportunities there in the silver space. As you know, it's difficult to bet on political risk, but if it changes, I think that's important. Everything else, well, so Lobo, you like copper, it's an essential thing, and you're bullish on commodities, why not oil? Well, oil, we've got an oil glut, come on. OPEC just quadrupled, they're ramping up again. I think they're trying to shut down the US shale producers. This is supply side war. This is very bearish for prices. I don't see any reason to think, other than a massive conflagration. If Trump decides that he's losing his fight and he wants to wag the dog and distract Americans, maybe he gets together with Israel and they bomb Iran, and then oil could go. But this isn't a trend. This isn't a chart or something. That's a lightning strike that may or may not happen. There's no way to predict the odds. Right now, I cannot think of any near-term reason to bet on oil. All the signs, 100% of the signs are downwards. And this war between OPEC and the US, if nothing else, I think is not done. I mean, yay, we're making friends today. The US is going to send our best chips to Gulf states because they never sell anything to China. So that's perfectly safe, right? Our world makes so much sense. Anyway, the key takeaways here, and I'm almost done, is I love it when we have the 2 yellow metal portfolio because it's self-hedging. We've got gold and uranium, the 2 yellow metals, though actually it's uranium oxide, but okay, the 2 yellow metals. If I'm wrong about the risk and the safe haven demand for gold, in that world, the industrial side surges. Okay, maybe I missed the bottom on copper, but my uranium portfolio goes through the roof. In the world where things are continue to be scary, Trump keeps rocking the boat, there's no agreement with China, maybe uranium doesn't come back up so quickly, but my gold goes nuts. But there's a very high probability with uranium being recession resistant that both go up. And I really don't see a world in which both go down. So this self-hedging aspect of the 2 yellow metal portfolio would be my main recommendation for anybody going away. That's the red pill recommendation, the 2 yellow metals, and I'm not mixing up my colors here. I see it as a win-win. I've got just a minute left, and maybe I can take a question, but hopefully you'll remember some of that. Yes, sir. So, there are some theories about how some are more trustworthy than others, but my main view here is just what are your investment goals? That's the lowest risk way to play uranium. You clearly don't want to stuff uranium under your mattress. So if you want exposure without exposing your tender body to uranium, then those kinds of uranium-like substitutes are the obvious way to go. But if you want leverage, right? Those things will track uranium. If you want leverage, then you need to go with the mining stocks. And on down the food chain, the higher the leverage you want, the more risk you have to take, understanding that's what you're going for.
Could you name just internally 3
No. Sorry, I'm the red pill guy. I'm infamously obnoxious and disliked because I don't give out free stock tips. That's what my clients pay me for. It's disrespectful to them. I've given you my broader market guidance. That's what I give away for free. It tells you what I value macro at, that I don't charge for it. But yes, that's what clients pay me for. Sorry. Platinum. It's an industrial metal. And people have told me, I kid you not, for 15 years, people have told me, oh, the platinum's cheaper than gold, it has to go up. And it just keeps not doing that. One year they will be right, but I have no reason to believe it's this year. It's an industrial, it clearly moves based on, it's funny, this is kind of like one of those silver things. On the daily basis, you watch the platinum and gold charts, and they will wiggle in the same direction. But if you look at the yearly charts, they're like all, platinum responds as an industrial metal clearly to the automotive sector. And by the way, if we are looking at a Trump session or the European equivalent before things get going with the spending, autos are the first thing get whacked. After your house, the automobile is one of the household's biggest expenses. And when you're tightening your belt, the auto sector always gets whacked in a recession. This is very bad news for platinum and palladium. And in my view, my entire experience with them is that they are primarily driven as industrial minerals. And people say, oh, well, what about South Africa might blow up? Or Russia supplies the palladium and there are. Yeah, people have said that for 20 years and it's still, just look at the price, right? I mean, in my mind, platinum is the little old lady in the commercial, I've fallen and I can't get up. So, sorry. That's my view. Red pill. I think I'm out of time, but one more.
What do you think about palladium?
I just said platinum and palladium. Same thing, or it's even worse, perhaps. Sorry. Okay, one thing. There is a non-trivial chance that by the time the dust settles and the economy really gets going, I know some people hate electric cars, but BYD is a real thing. Germany has a Tesla Gigafactory, all this stuff. There is a non-zero chance that by the time the auto sector really takes off again, that the market for platinum and palladium just never comes back. It might be 60% electric by then, 70% electric by then. There is a non-zero chance that the use case for platinum, palladium, rhodium-2 just goes to almost zero for industrial uses. Sorry, give me the hook. Thank you, Kai. Thank you very much.
Lobo, I don't want to. Thank you so much. Really, really, really appreciate it. Thanks so much. Appreciate your time. Thank you. Well, that was impressive. I always appreciate listening to Lobo. Too bad we missed our chat last week, Lobo, talking about the Fed and our life. We'll have to do that again soon, next time. Maybe they'll actually do something, so maybe it might be worth talking. Maybe we'll have to save that for September, Lobo. In the meantime, we got cold drinks downstairs. Couple last words. Make sure to wear your badge downstairs. There's another event at the same time, and only people wearing their badges will get a beverage. We got cold beer, some wine, some finger food as well, so please continue to network downstairs for the next couple hours. It'd be my pleasure to host you downstairs. A few of you, actually over 20, have signed up for the 5-kilometer run club tomorrow. Show of hands, who did? I know who did. All right. Perfect, because we got some shirts for you outside. So please walk past the registration desk. I know some of you sent in their sizes. We don't have shirts for everybody because some signed up late, so please don't be disappointed. We'll make up for that somehow at some other point. But we have about 20 shirts, I think, so we should be okay for most of them. And if you signed up but don't intend to run, let us know. Maybe we can give the shirt to somebody else and we'll figure something out. So I hope everybody had a great day. Everybody got some value out of day one. So thank you. Thank the team outside, and I'll see you tomorrow at 10 a.m. Thank you so much.